The longest U.S. government shutdown in history is finally over, but the markets aren't celebrating. Instead of clarity, we got confusion, fading hopes for central bank rate cuts, a tech pullback led by AI giants, and a pileup of missing economic data. This week, investors around the world were asking the same question. If the shutdown's done, why do markets still feel stuck? Wall Street finished the week mixed. The S&P 500 barely moved, the Nasdaq slipped 0.5%, and smaller caps in the Russell 2000 fell nearly 2%. The shutdown may be over, but now there's a data fog. The September jobs report won't come until November 20th, and the October one, still unscheduled. Meanwhile, the Fed turned more cautious. Odds of a December rate cut dropped from 70% to 46% after hawkish remarks. AI stocks, once untouchable, lost their shine as investors questioned just how much companies are really earning from the AI boom. The one bright spot? Corporate earnings. S&P 500 profits are up 13% year-on-year, far above expectations. But even that wasn't enough to lift sentiment. Across the Atlantic, European markets staged a short-lived rally. The Stoxx 600 jumped 1.8%, with France and Italy leading. But under the surface, the story's less encouraging. Eurozone industrial output rose just 0.2%. Germany's confidence is slipping and growth momentum is stalling. France and Italy are holding up better thanks to stronger factory output, but across Europe, consumers remain cautious and central banks are trapped. Inflation still high, growth still weak. In the UK, stagnation is setting in. Unemployment rose to 5%, GDP barely grew, and a cyber attack that halted Jaguar Land Rover production sent car output down almost 30%. Markets now expect the Bank of England to cut rates as soon as December. Meanwhile, in Asia, Japan's market found support from a weaker yen and a new fiscal push by Prime Minister Takaichi. Confidence is improving. The manufacturing sentiment index hit its highest since 2021. But in China, the numbers disappointed again. Industrial output slowed, retail sales cooled, and the property slump deepened. Hopes now rest on a 1 trillion yuan stimulus plan to keep growth near the 5% target. So, even with the shutdown over, uncertainty rules the markets. AI stocks are wobbling, the Fed's turning cautious, and Europe's recovery looks fragile. For a full debrief, including the top risks to watch next week, tune in to our latest episode of the Weekly Debrief on Global Markets, now live on our channel. Don't forget to share, like, and subscribe. It helps us bring you sharper market insights every week.